Hello, hello, and welcome everybody. Thanks for tuning in today. I'm so excited to have you all here. So, today we are going to talk about part two. We're going to continue the conversation from last week about what's to come after the Bitcoin halving. So, let's go ahead and get into it. I'll go ahead and share my screen. And yeah, we've got a good one for you today. Hold, please. There we go. All right. Perfect. Can everybody see my screen okay? Let's see. Yeah? Okay, great. All right, so let's get into it for today. The halving is only the half of it, right? So all of the hype that you've heard recently in cryptocurrency has been about the Bitcoin halving, but I'm going to tell you why the halving is just the half of it, all right? So what's in store post-halving? Our game plan for today is to talk about, I just want to give a little recap if anybody's new here. What is the Bitcoin halving? If you were here last week, you can get yourself a cup of coffee or something while we talk about it. But I want to get everybody up to speed on what's the Bitcoin halving. We're going to talk about big money. We're going to talk about trends in the market and my thesis for what's to kind of play out for the duration of the year. So first of all, if you're new here, who am I? Who's this lady up here talking to you today? My name is Coach Casey. I'm a partner here at AR Crypto. We are a cryptocurrency and decentralized finance education company. I head up our education and research over at the ARC, and I've been able to create financial, location, and time freedom for myself through cryptocurrency. So a little bit about my personal crypto journey. Like, how did I get here from where I started, or where did I even start out? So in 2014, I'd first bought Bitcoin for frowned upon activities. Myself and my friends, we bought Bitcoin to go buy drugs and fake IDs on the dark web. Not ideal, obviously, but that's how I got here. And so I used it and I had some left over. At the time, Bitcoin was really, really tricky to interact with. It wasn't as straightforward and simple as it is now. We didn't have these nice, beautiful exchanges that we do now. So at the time, we had bought this Bitcoin, we had done our transactions, and there was some left over, and we couldn't figure out how to get it out. So we just kind of wrote it off as a loss, whatever, it's gone, right? So 2017 rolls around, and I start hearing more about Bitcoin. And I was like, I think I have some of that Bitcoin stuff somewhere. So I'm going to tell you right now, I found some of that Bitcoin, and I thought I was the greatest investor of all time. I thought I just stumbled upon a gold mine. I'm like, this money just fell out of the sky. Now, the thing about me being the greatest investor of all time, I sold almost all of it at a 50x gain. It was incredible. However, I didn't take the initiative to learn about why did this asset just explode. I wasn't at that point in my life. I didn't care. I didn't get it. Okay, so when I sold, I didn't sell all of it, but I sold almost all of it. I should have taken the opportunity, and coulda, woulda, shoulda, right? I should have taken the opportunity to say, okay, why did this thing that I bought all these years ago go up this much now? But instead, I just treated it like free money from the sky. Unfortunately, like I said, where I was at in my life at that point wasn't a point where that money was any good for me. At that point in time, I was addicted to drugs. I was not being a productive citizen. And so when I stumbled upon all of this money, it swiftly led me down a really, really bad path. I was already on a bad path, and that money just further exacerbated what was going on. So I was actively addicted to painkillers. After I stumbled onto all of this money, I started blowing through it left and right. I totaled 2 cars, got DUIs. I was in the hospital frequently, overdosing. I went to jail, and then subsequently went to rehab. I went to treatment. I got my act together. I got things cleaned up. So that 2017, that bunch of money that I stumbled onto, you might be thinking, well, wow, what a great opportunity. You could have taken that money to invest. You could have taken that money to start a business. I wasn't there in my life. And that money quickly led me to zero. Actually, below zero. This picture that you see here, luckily, this saved my life. I am so incredibly grateful for this picture here. But this picture is my bill from rehab. I went to inpatient rehab for 71 days in 2018, and I had a bill of $131,000 when I got out of treatment. So to tell you that I started at zero would be an understatement. And I'm not here to give you my sob story. I don't want you to feel bad for me. Like I said, I'm extremely grateful for these opportunities. I just want you to know that, starting in crypto, you don't have to start from somewhere, from a certain point. Like I quite literally started 6 figures in debt. Okay. So let's talk about the rest of my crypto journey after that. In 2019, I started to become interested in crypto again. I started to hear about it. And I had taken, like I said, I'd turned my life around. I started to take the initiative to learn about money. I was starting businesses. I was trying to figure out how I could get out of the rat race. Because at that point, I had a 9-to-5 job. I was working for a Fortune 200 commercial real estate firm. I actually landed a good job for myself. I was really on the right path. And but I started hearing about crypto more and more. And, flashbacks, unfortunately, to making all that sky money from Bitcoin. It was like a thing that just kept recurring in my life. Like every couple of years, this crypto would just come back around. Finally, I was like, I should probably pay attention to this stuff. So I started buying Bitcoin. I started buying ETH. I didn't really have much of a clue what I was doing, but I started to kind of get behind it. Like I didn't fully have the financial wherewithal or the economic wherewithal to understand like exactly what I was doing, but I started to get behind the movement. I started to understand like, oh, this really could combat what's happening with the US dollar. And this is a movement of money for the people. And again, I think I'm even upselling it a little bit better. Like I think my mindset at the time was, more of the anarchist type of like, yeah, freedom for the people, like, whatever. So but that's kind of how I got back into the space in 2019. And like I said, I was in a 9-to-5 job, and I was so sick and tired of spending every single day the same way for potentially the next 40 years and calling it a life. I knew that wasn't for me. So I started an e-commerce store. I started a women's clothing boutique. I had tried all of these different things in an effort to get out of this rat race that I was in. And I was just sick and tired of, like I said, living the same day over and over and over again and calling it a life. I was sick of sitting in an office with no windows. I was sick of, I couldn't take a day off unless my boss told me I could. I couldn't go to the grocery store at 2 p.m. if I wanted to. Like, I just was sick and tired of it. So I started to really dive into financial education. And that's what I really leaned into, again, kind of as I was changing my life, was I wanted to be the best version of myself. And the best version of myself physically, mentally, spiritually, and financially. So with this financial education, again, I became interested in cryptocurrency. And so in June of 2021, through a mutual friend, I was introduced to Gaven, my now business partner and the founder of our company, The Arc. And I joined The Arc as an Apex student. So what's full circle about this, it's really cool, is that's actually the class that I teach now. So I teach it twice a week on Tuesdays and Thursdays. And it's, again, such a wonderful full circle moment. But that changed everything for me. When I learned what the future of finance could potentially look like with this emerging technology, and I really understood crypto, and I really understood what to avoid in crypto and those kind of things, that's when things started to change for me. And by March of 2022, I replaced my 6-figure salary with cryptocurrency, and I fired my job. I finally had achieved that freedom that I had so desperately been searching for. And I don't know why this happened to me last time. I don't know why the pictures aren't loading, but anyway, this picture aside, I went from 6 figures in debt in 2018 to now over 7-figure net worth just a couple of short years later. And funny thing to tell you, since you can't see the photo, this is a picture of me sitting and working on my laptop on a yacht. And I was going to tell you, but it's not about the yachts and Lambos. That's just to get your attention so that you can see, like, this is what this stuff can produce. And what's cool about that picture was that I was sitting and working on a yacht on a Monday afternoon in Miami with my friends, because you don't have to live according to what society tells you that you have to do. So pretend that it's there. But through cryptocurrency and through this newfound education, I found purpose. And I became extremely passionate about self-education and technology and financial freedom. So now I'm on a mission to share that passion through educating and empowering you guys. Last year, I delivered a TEDx talk on the power of blockchain technology and cryptocurrencies to help people understand. And so that's why I'm here with you all today, is to just kind of enlighten you on what's going on in the market, explain what I think is to come over the next, the course of the year, and just really the technological revolution that is occurring right in front of us. So Thank you for listening to me blab on about myself for a little bit, but I wanted to let you know who I am, where I started, and where I'm at now, and the fact that I want to help you do the same. You don't have to live according to how society tells you that you have to live. You shouldn't spend a single day doing shit that you don't want to do. Life is too short. Life is too precious. All right, so let's get into it. Let's talk about the halving. But before we talk about the halving, I do have to tell you that this is not financial advice. I'm not your financial advisor. I'm simply educating you on what's happening in the market right now. Okay, I'm simply educating you on what is crypto, what's the halving, and all of these things. Okay, so this is the time when if you need to go grab a cup of coffee, if you were here last week when I already explained what's the halving, go ahead. But for those of you who are new around here, let's get you up to speed with what's the halving, what's all this hype with the Bitcoin halving that's took place this past week. So Bitcoin runs on a network of computers all around the world. It's not issued or controlled by any one single entity like a government or a bank. It operates, like I said, on this network of computers all around the world. Okay. And these computers, they're called miners, that I'll get into here in a second. But the halving is an event that's programmed into Bitcoin's code every 210,000 blocks. And if you need a full explanation of kind of like what is all of this, go back and watch the video from last week because this is part 2. Okay. But we'll do a brief overview. So it's programmed into Bitcoin's code to happen every 210,000 blocks. And every 210,000 blocks just happens to pan out the time frames around 4 years. So when you hear about the 4-year cycle in crypto and in Bitcoin, this is primarily what kicks it off. Okay. So it's a big deal because it's something that only happens every 4 years and it generally influences what happens in the market. So like I said, these computers that run the network are called miners. And the way that they do that is they use computational power to solve basically complex mathematical puzzles that can, via cryptography, verify the validity of transactions and the state of the network, who owns what assets and what transactions are happening. So that's just kind of a little background here for those that might be new around here. And these miners are rewarded with new Bitcoin for their hard work. And that's what's called the block reward. So this block reward is very important. So keep that in mind, the block reward. Now, the miners make money 2 ways. They make money by block rewards and also by the fees that are paid for us using the Bitcoin network. All right. So Bitcoin has a fixed supply of 21 million. There will never be more than 21 million Bitcoin. Presently, there are 19.6 million Bitcoin in circulation. And how do we get from that 19.6 to the 21 million? Well, by way of these miners. Those block rewards get paid to the miners, and that is how new Bitcoin is brought into circulation. Okay? So the halving has actually decreased the new issuance of Bitcoin. It cut the mining, the block reward, in half. So if we look historically, when Bitcoin started out, the block reward was 50 Bitcoin. That's a lot of Bitcoin. Subsequently, with each halving, it, gets halved. So it went from 50 to 25 to 12, 6, so on and so forth. So this halving that took place this past week, the block reward, aka the new amount of Bitcoin that's coming into circulation, is 3.125 per block. Okay, a block happens every 10 minutes, and that is how new Bitcoin is brought into circulation. And the purpose of this schedule is to keep Bitcoin deflationary and retain its value. And what's cool about this, relative to let's say the US dollar, is Bitcoin has predictable monetary policy. That's one of the things that makes it so revolutionary. That coupled with the fact that there's a scarce supply of it. Bitcoin cannot be printed or created or brought into circulation after that 21 million. It's not like the dollar where we can just fire up the money printers. Okay, Bitcoin supply is fixed, and it's fixed as in there will never be more Bitcoin. So those are a couple of the monetary properties that are important to keep in mind with Bitcoin. Is again this deflationary schedule that it has. The fact that, like I said, it has a predictable monetary policy. We know that this halving is going to happen, and we know how much Bitcoin there is. Mathematically speaking, now after the halving, Bitcoin is twice as scarce as gold. So if you look at, there's something that's called the stock to flow model that you can look at. Bitcoin is now mathematically twice as scarce as gold. So when we look at asset classes and why things have value and what the purpose of all of this is, that's I want to just kind of make some comparisons for you. Now, the other thing is that you'll notice is as this block reward is decreasing, Bitcoin has become increasingly valuable. So in time, the United States dollar has decreased in value because we keep printing more and more and more of it. Bitcoin is becoming increasingly scarce. 50 Bitcoin in 2009 versus 50 Bitcoin today, there's a big difference there, right? So anyway, that's to explain to you kind of what the halving is and just set the scene a little bit here. Again, if you want the full in-depth breakdown, go ahead and watch last week's part 1 of this segment, and I get into a little bit more. But that's kind of what general premises of what the halving is. So how does that impact the market? How does it impact Bitcoin? How does it impact crypto as a whole? Let's talk about it. Traditionally speaking, and one more point to set the scene for you guys. We're on this past halving was the 4th halving, and forgive the outdated photo here. There's no new pictures since the halving just occurred that do include the halving that took place last week. But anyway, the first halving was in 2012, the next halving was in 2016, then 2020, and then last week here in 2024. Now what we've seen over time is growth. And not coincidentally, after the halving, we typically see the next leg up, right? Why is that? Well, it's largely in part due to the supply shock that happens when less and less and less Bitcoin is coming into circulation. So let's look at, again, more historical data. Let's look at kind of how those timeframes have tended to shake out. So if we look back at the halving in 2012, the year prior, we kind of saw this run up and then a little consolidation period, or like a sideways choppy market around the time of the halving. And then roughly a year after, look at this rally that has occurred. All right. And so that's just the first leg of the rally. Actually, I'm sorry, this is around 6 months after. And this mark here is a year after, because these bars here for you are 1 year prior and 1 year post. But so we started to see a rally about 6 months after the halving, and then about a year after the halving is when we saw those blow off tops. That's when the market was reaching all-time high. I mean, it was far exceeding all-time highs. It was setting new all-time highs every single day. And then we go into a bear market for a couple of years. That's how markets work. And the thing about cryptocurrency is that they work in cycles just like other financial markets do. We have the debt cycles, and we have cryptocurrency works the same way. Now, conveniently, the halving tends to align with that as well. But again, more on that later. So just patterns here are what I'm wanting you to look at. Okay, so the next halving, we had the run up prior. We had the halving event. We had this little sideways choppy market. We started to breach previous all-time highs about 6 months later. Okay, and then we started to see these blow off tops yet again, starting around a year after. And this cycle lasted a little longer. It even went on to continue for around 562, don't quote me, days. The most recent halving that we've had prior to the one last week, the cycle acted a little bit differently. The cycle acted slightly differently, partially because of COVID, right? There's a big crisis. There's a big financial crisis that happened. And so, but we still saw a similar pattern arise, where this dip you see right here is the COVID crash. Market started to run up. It went sideways for a bit. About 6 months after the halving, we start to see, look, we're breaching previous all-time highs. And then we start to see a blow off top. Now, what makes the last cycle a little bit more interesting is the fact that we had what's called a double top, where these were a little bit more linear, right? The growth went straight up and straight up and straight up. Well, last time we actually saw a big top, and then the market retraced significantly, and then we saw another big top. Now, I'm going to tell you right now, Bitcoin's a young asset class. There's not a lot of data to study. Okay, so a lot of this stuff is unprecedented. Things aren't going to work the same way every single time. We've only seen this happen a couple times. Bitcoin is, really one of the youngest major asset classes that we have. So while we can study prior data, it's one of those, history doesn't often repeat itself, but it often rhymes. And we can take patterns and we can take trends from it, but it shouldn't be gospel, as they say, right? This time's a little bit different. We saw Bitcoin hit its new all-time high last month. I just told you the halving happened last Friday. So that's interesting. We've never seen that happen before. And the reason that I'll tell you that has that happened this year and why this cycle has been treated a little bit differently, two words: big money. Okay? Something that you should understand about cryptocurrency relative to other asset classes is that largely cryptocurrency has been led by retail investors like me and you. Most asset classes are led by institution and institutional money. Cryptocurrency has kind of flipped that script a little bit. So the reason that this cycle has been different is because we have more big money than we've ever seen previously. A couple of the major catalysts that led to the run up at the beginning of this year, and even over, since kind of last fall, are new spot Bitcoin ETFs that were introduced at the beginning of the year. And if you're not familiar with an ETF, it's what's called an exchange traded fund. It's a way for traditional investors to have exposure to the price of Bitcoin basically on the stock market. They can invest through these traditional avenues without having to kind of learn and understand how to self-custody their Bitcoin. They don't have to learn how to go, set up an exchange or set up wallets. They can invest through traditional vehicles. That's what an ETF is it's like it allows you exposure to Bitcoin's price action so that you can speculate on the asset class, but you don't have to know the wherewithal. Okay. Now, the problem with ETFs is that you don't technically own any Bitcoin. You don't it's in their custody. You don't hold that Bitcoin. Now, it can be redeemed for Bitcoin. I'm not to say you don't, but you don't have it in your custody. Okay, there are custodians that hold that Bitcoin for you. Now, the other major catalyst for I think some of the growth earlier this year is expectations that the Federal Reserve was going to cut U.S. interest rates this year. And as we've seen by recent CPI data, Consumer Price Index, which is inflation, that hasn't happened, and it isn't likely to happen anytime soon. It's coming in, a little bit hotter than what we had anticipated. So I think these are two big catalysts, primarily the ETFs, but this is something I'll get into more later. But this is what's led to a lot of the run up in the beginning of the year, along with honestly just speculation on the Bitcoin halving. I think anytime there's a halving, there's people that want to play buy the rumor, sell the news, or buy the event, right? So there were a lot of people that were trying to speculate on the fact that Bitcoin's going to go up after the halving. So yes, there's money flooding into Bitcoin. All of the attention is on Bitcoin leading into the halving. But the reason that's caused the price to go up is economics 101. Why does the halving offset these events? Well, when there's more demand for Bitcoin and there's less Bitcoin, the price has to go up. There's more people fighting for the same amount of Bitcoin. Again, by way of economics and math, price goes up. Now, does it go up in a straight line? Absolutely not. I just showed you the charts. It doesn't. But that's what happens over time. Okay, that's kind of some of the result of this. And again, the halving is the supply shock. All right. The ETFs and the institutional money are the demand shock. And when these two things are coupled, that's explosive. So, like I said, with these ETFs, we're starting to see unprecedented demand. We've never had this kind of institutional money before. And when I say we've never had, I don't just mean like, oh, they weren't interested. I mean, a lot of these major, again, institutions and hedge funds, they wouldn't touch the asset class out of fear of persecution from the SEC and, other government bodies. And so now that we're starting to see more regulatory clarity in the United States, more money can come into the space. More money can flow in legally and without fear of any kind of running into issues with the guys that you don't want to piss off, right? So the other thing to keep in mind is that cryptocurrency is a global asset class. this isn't just a US asset class. While, the spot Bitcoin ETF volumes are, that's a US driven primarily market, this is cryptocurrency is a global asset class. It's not owned or run or controlled by the United States. It's for everyone all around the world. And so just next week, this screenshot I took yesterday, Hong Kong spot ETFs are to start trading next week. So it's really, really starting to catch on. There's catalysts that are popping up every single day, left and right. And what's cool about the ETFs too, that's starting to happen is, we saw, here's what's happened with the ETFs. So they launched at the beginning of the year, and a lot of money flooded into them, right? There's a lot of people that got into these products. But we saw, the big hype, the initial excitement about them, and then it's kind of tapered off a bit. Okay, like the interest has died down a little bit. People are like, yeah, they're here now, we get it. But there's also the whole host of people that doesn't get it yet. There's the whole host of people that they don't even understand what's happening, or they don't care to be educated on Bitcoin and cryptocurrency as an asset class, and so they're sidelined still. So something that I think that's interesting, is another major catalyst for the market, is UBS, Morgan Stanley, and other private wealth management firms are now beginning to what's called solicit. Okay. And so these private wealth management firms, what they do is they sit down with their clients and they basically recommend. And when I say their clients, when we're talking private wealth, we're talking, billions and billions of dollars. They basically recommend the best financial products that are on the market. And they make money when they make you money. So they're going to try and make as much money as possible for you, right? So why wouldn't they want to have exposure to the best performing asset class of all time? Well, in my personal opinion, it's due to a lack of education and a lack of understanding what's to develop with these things. But now UBS and Morgan Stanley and these guys, they're starting to get smart. They're starting to understand what's happening here. They see the big picture. They see what's going on. And so they're shifting, they're starting to open up for, again, what's called solicitation, where up until this point, clients of UBS and Morgan Stanley, if they asked you about the spot Bitcoin ETFs, then you could talk to them about it. But you couldn't go and push these products on them, okay? Like you do with any other fund or product that's on the market. Now UBS and Morgan Stanley, and when I say push products on, like that sounds predatory. I don't mean it in that way. I mean more of like educating you about those products. Now UBS and Morgan Stanley, they can schedule meetings and they can sit down with their clients and they can have these conversations. They can talk with them about Bitcoin and cryptocurrencies and blockchain technology, and they can explain what's going on here. So this is another major catalyst that I think we're going to see drive a lot of money coming into crypto. And so for a couple of reasons, I believe this is just the beginning of the bull run. And I want to show you using data what I'm referring to. So people often come to me specifically right now and they say, well, Casey, Bitcoin already hit its all-time high. Don't you think that, the bull run has already happened? Don't you think that crypto has had this insane run up? You just told us that at the first halving, it was at $12 and now it's at 60-some thousand dollars. How much more room does it have to run? Well, ask the S&P. I mean, since 1988, we've had an upward trajectory. And like I said, it doesn't go up in a straight line forever. You're going to have the market cyclical. There's going to be entire years where it does nothing but go down. That happens. But if you'd have, in the early 2000s said, yeah, there's no way that the S&P can continue to go up, especially after it has this big pullback, you're like, S&P is toast. It's done. No way. Then it goes on and grows. All right, now there's no possible way that the S&P could possibly go any higher. These companies can't grow anymore. And if you don't know what the S&P 500 index is, it's basically a way to invest in all of the top 500 companies on the stock market. So this is showing you the growth of the top 500 stocks in the stock market. So basically the S&P is a good way to see the growth of the overall stock market. So again, just making simple comparisons to cryptocurrency. People say, how can crypto continue to grow? Well, look what stocks have done, okay? And look at that, we're still growing. But it's not just Bitcoin here, okay? So, we looked at the S&P and that's 500 different stocks, that we're kind of comparing there. We're starting to see a shift of attention from just Bitcoin to I think what's happened earlier this year with, again, the ETFs and all these things is Bitcoin has become more legitimized in the eyes of the traditional investor. Now we're starting to see that legitimacy flow into altcoins or alternative coins. And all an altcoin is an alternative to Bitcoin. Bitcoin was the first major cryptocurrency, not the first, but it was the first major cryptocurrency, really the one that got adopted and kicked the whole thing off. Anything that came after Bitcoin is considered an altcoin. So let's talk altcoins. BlackRock launched its first tokenized fund, BIDL, on the Ethereum network. So BlackRock, the largest asset manager in the world, has a tokenized fund on the Ethereum blockchain. So again, we've got this trickle-down effect. It's not just Bitcoin anymore. Now they're starting to understand the tech. They're starting to understand what the blockchain can do. They're starting to understand the importance of understanding what's going on here, right? So again, not to just keep plugging my webinars, but I do explain them for you if you want an understanding of this stuff. Like a couple of weeks ago on our webinar, go check out our channel. I did a whole breakdown of the BIDL fund and what that is and who BlackRock is and that implication on the market. So if you're interested in learning about BIDL, go check that out. But again, BlackRock, largest asset manager in the world, they decided to tokenize this fund called BIDL. And what BIDL is it's basically a tokenized money market fund. And so it's got treasury bills and repos, but it's tokenized on the blockchain. And what I think is really fascinating about this is this key point here, that they did it on the Ethereum network. BlackRock, of anybody, has more resources than quite literally almost anybody in the world. They could have gone and built a private infrastructure. They could have gone and built their own blockchain. They chose to develop on public infrastructure, which I think is cool. And it again, really, it gives credibility to what's happening here. And it really validates the Ethereum blockchain and its security and its infrastructure. And so, again, it's kind of trickling down. It's not just Bitcoin. It's really, we're starting to see this, and BlackRock's leading the charge here. But it's not just them. All right. So after BlackRock was they were the ones that really led the cascade of approvals on ETFs earlier this year. So now there are a bunch of spot Bitcoin ETFs that can be traded. But BlackRock was they were the ones that really got that push through. Okay. It's always good to have the big guy in your corner. It's always good to have the big guy leading the charge. But like I said, it's not just them. Like there's global banks like JP Morgan and Citigroup. They're looking at other ways to use blockchain technology now that they see BlackRock tokenizing funds on chain. Now all these people are starting to realize that basically anything can be tokenized on the blockchain, and it's a much better and more efficient and more transparent system, which I'll elaborate on as well. So any of these financial instruments, bonds, credit, gold, diamonds, to things like intellectual property, real estate, like health records. There's so many things that can be put on the blockchain. And now when I say health records, that one kind of scares people a little bit because I just also said transparency, but know that it doesn't mean everybody can see your health records. Okay. It's just a secure way to prevent insurance fraud and things like that. So, but again, we'll get into some of this more. All of these people, the reason that they're doing this is because they understand the potential for faster settlements, increased efficiency, and just overall less friction. And what blockchain is doing is it's setting a precedent for traditional finance, and they can't ignore it anymore. I mean, the New York Stock Exchange is now considering 24-hour trading in response to the crypto trends. The implications that the crypto market is having on basically everything else show you that they're kind of like, well, we either need to do what these guys are doing or they're going to take over. And so again, just understand that it starts with Bitcoin and it trickles down, and the implications of the blockchain technology as a whole are a lot. Again, it's efficiency, it's transparency, it's open, it's available to everybody. We can bank the unbanked. All you need to have a cryptocurrency wallet is an internet connection. You don't have to have a minimum amount of money in your bank account like you do at most banks. And there's a lot of things that this stuff can do that really, really can, even it's a global asset class, right? Like world remittances can be done on the blockchain far simpler than they can by going through the traditional banking system. But like I said, it's not just about transparency. It's not just about efficiency. Let's talk transparency. Robert Kennedy, earlier this week, actually, he was on if you don't know who Robert Kennedy is, he's a presidential candidate. He had a rally in Michigan, and he said, I want to put the entire US budget on the blockchain. Now, am I delusional? Do I think that this is going to happen? No. But I love that the conversation is happening because it gets people, first of all, what's the blockchain? People that don't know, right? He's getting the conversation started. Politics aside, I don't care if you like RFK or not, okay? I like the conversation. Why would it be so impactful to put the US budget on the blockchain? Because then we could see where the money is being spent. I don't know if you know this, but the Pentagon has never passed an audit. They've had 6 and they have failed 6. And in the last one, they couldn't account for where $1.9 trillion was spent. Poof. 1.9 with a T trillion dollars that our government could not account for. They couldn't tell you where it got spent. That's why it's a novel idea to put the US budget on the blockchain. But it's terrifying to the government because then there's transparency into what's going on there. Money can't be hidden. It can't be, right? So again, I love to see the conversation, and I just kind of want to show you what's going on. Like this stuff is, it's not me who lives in a crypto bubble that is talking about this stuff. It's really, really starting to come out there, and these big conversations are starting to pop up. So let's talk about kind of, again, that flow from Bitcoin into the altcoins. So I showed this, last week on here, but I want to explain a little bit more about how capital flows in cryptocurrency. Typically what happens in a bull market cycle is this path to alt season. And this is an image that it's shared a lot. And it's this isn't from some economist. This is just made up by somebody, but it's true. I mean, it's how it works. Money flows into Bitcoin. Prices start to go up. Money starts to flow into Ethereum, but it doesn't outpace Bitcoin. It lags. Then we start to see Ethereum dominance stir up. And then when money starts to flow into Ethereum, then these large cap, market cap cryptocurrencies with these big narratives behind them, we'll talk about narratives, pop up. So again, the money's just flooding, it's flooding, it's flooding. And this is where the tech is. This is where the crypto infrastructure is. And then the money starts to flood into retail. It starts to flood into alternative coins like meme coins and gaming projects and things that are, way more speculative and oftentimes just, kind of silly. That is how the flow of money goes in a cryptocurrency bull run. All right. So right now we've seen the price, the money has flooded into Bitcoin. But let's talk about the alts. Okay, so this right here is what's called the total 3 market cap. The total 3 shows the total market cap of all of cryptocurrency, excluding Bitcoin and Ethereum. So this is everything else. Okay, so if we look at where we're at right now, we've had a big run up, as the markets turned around and since the fall of last year. But we haven't even come close to breaching previous all-time highs as far as the rest of crypto goes. Yes, Bitcoin saw all-time highs. The rest of the market hasn't seen it yet. So there's something that happens in crypto where there's like risk on versus risk off. Okay, and so we look at that in traditional asset classes, like when things get bad in the economy, or when inflation is too high, or when again, just overall things are bad or risky in the economy. People flood to what are called risk off assets like gold. Okay, in times of strong, in a strong economy, or times when everyone's flush with money and things are hunky dory around, economic world, people flood into risk on asset. They're willing to take on more risk in their portfolios. So let's talk about how that happens in crypto too. If we look here, this chart that I'm showing you is what's called the Bitcoin dominance chart. This is showing you the dominance of Bitcoin in the market. So presently, as of yesterday, Bitcoin had 54% dominance in the market. What does that mean? Well, that means if the total market cap of crypto is $2.5 trillion, Bitcoin is comprised, or the market cap is comprised half of Bitcoin. That's what makes up that market cap is, if the market cap is $2.5 trillion, that means 1.25 trillion of it is in Bitcoin. That's what Bitcoin dominance means. It's, again, how much Bitcoin has of the total market share of cryptocurrency. So if we look here, you'll see something interesting. This red line is last halving. Okay, so this is the last Bitcoin halving. And we see Bitcoin dominance swiftly fell after the last halving. And if we jump back here, we see that after the last halving, altcoins exploded during the same time frame. So what's happening here is money will flow as far as cryptocurrency goes. And listen, cryptocurrency as a whole is an inherently risky asset class. So I'm not comparing, crypto to holding gold. I'm not comparing crypto to holding stocks. I'm saying crypto itself. As far as crypto goes, Bitcoin is the risk off asset. Okay, so in times of uncertainty, in times of volatility, Bitcoin holds the dominance because it's the least risky thing in crypto. Now, when we get into alt season, when we get into the market starts going up, what happens is money starts to flow into altcoins and out of Bitcoin. And we still will see that as the overall market starts to increase, Bitcoin will increase because they'll take their profits and they'll buy some Bitcoin, and new people will come into the space and they'll buy Bitcoin. But what we, again, generally see is that as the Bitcoin dominance is high, alts are low. I mean, it makes sense, right? It's, the more Bitcoin takes of the market share, the less the alts are taking of the market share. The more the alts are taking of the market share, the less Bitcoin is taking up of the market share. So if we look here again, swift decline in the Bitcoin dominance, and this is right where that alt season was that I showed you last time, where the rest of the crypto market is rallying. So where are we at right now? Well, we've seen this increase in Bitcoin dominance. Why is that? Well, again, leading into the halving, of course, Bitcoin dominance is going to increase. Everybody's speculating on Bitcoin. Spot Bitcoin ETF inflows, of course, Bitcoin dominance is going to increase. The institutional investors coming into the market now, they don't give two shits about your favorite AI coin. Of course, Bitcoin dominance is going to increase leading into that. But what's happening is, as cryptocurrency gains mainstream attention again, as it does, when it goes back up, everybody cares again. Money starts to flow back into alts. The people that join the market when the market's rallying, oftentimes it brings in a new class of retail investors. Again, we still have this unprecedented institutional demand. I'm not negating that. But there are other things that money is going to flow into now. So let's talk about narratives. Let's talk about the things that money flows into. Last year in 2023, these were the top narratives in cryptocurrency. And this data is provided by a source called CoinGecko. So CoinGecko, CoinMarketCap, if you're not familiar, they're some of the top websites that people use to check prices of crypto, get all their crypto data, all their crypto information. So they really, they're some of the most used sites in cryptocurrency. They have a lot of data, okay? So the top narratives in crypto in 2023 were artificial intelligence, gaming, meme coins, Solana ecosystem, blah, 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 right? Now, the thing about a lot of this stuff is a lot of the narrative of the last year was tech, artificial intelligence, right? Real world assets, layer ones and layer twos, Ethereum, Avalanche, DPIN, smart contract platforms. Okay, some of these other things can be a little bit more speculative, which I'll talk about, like gaming and meme coins. But a lot of what we saw the attention on last year was the tech, because why? Well, when you're in a bear market, the people that stick around are the builders and the people who, well, quite frankly, the nerds, like me and our community here. The people that are in crypto during those times aren't the people that are chasing. They're not the people who are, gambling like a lot of the retail investors that join the market when there's a frenzy happening. So this is what the narratives look like last year. The top narratives in Q1 of this year so far have been meme coins by a long shot. And then some of these other narratives, I don't know if you can see this down here, but RWA stands for real world assets. This is where we're starting to see attention on, like BlackRock, for example, tokenizing their fund on chain. That's an example of real world assets. Real estate on the blockchain is an example of real world assets. And a lot of the cryptocurrencies that have benefited from that are the ones who are providing the infrastructure for those things to happen. Okay. AI, of course, we all know AI in and out of crypto has been the shiny object of the last year. Look at NVIDIA. DeFi, DPIN. DPIN is decentralized physical infrastructure networks. Again, very similar to real world assets. It's basically a way to tie real world things into cryptocurrency. For example, there's the first company that comes to mind in DPIN is, well, there's two examples I'll give you. Like decentralized data storage is a good example. There's a company that is currently making a decentralized version of Google Maps, where basically people drive around with the camera, and they want to decentralize Google Maps. They don't want the monopoly of Google to have all of your data and to have all of this. So anyway, that is DPIN. Layer ones are those layer one blockchains, GameFi, gaming, of course, and layer twos are secondary blockchain layers built on top of layer one. So this is kind of the narratives that has taken place so far this year. Now, why are meme coins so big, and why is AI so big? Well, it's because they're new, they're hot, and they're easy to understand. And I think this is going to continue over the duration of the year. I think that, in the past, in cycles, we've seen we saw DeFi summer was kind of the first thing that happened when DeFi came around. And if you don't know what DeFi is, it's decentralized finance. This is, the more robust aspect of cryptocurrency and the financial products that we have now. DeFi summer happened, and everybody was printing money in DeFi summer. And I don't literally mean printing money. I mean, they were making buku bucks because DeFi summer had emerged, and all of these decentralized exchanges and platforms were super, super hot. Last cycle, the next big narrative was gaming and NFTs. All right. You probably heard about all of your favorite influencers and celebrity endorsements shilling or promoting NFT projects. Everybody and their brother was getting into NFTs. Now, it's because it's like the tulip bulb craze, right? Like, it's an emerging, well, tulip bulbs are not an emerging technology. That's not a good comparison, but it's an emerging technology where we'll call it the dot-com bubble. Why did I even not think of that one? I don't know, but we're out of coffee. That's the issue. But when you look at what happened with NFTs, what happened is it's this emerging technology. Everybody thinks it's going to change the world, and then dumb stuff starts to get built, just like with the internet, right? There's this emerging technology. Dumb stuff starts to get built. People start to use it, and then we figure out what sticks. So that's what's happened with NFTs and with, again, all these things cyclically. And now I'm kind of talking in circles, but If we look at what's happening now, the reason that I think that meme coins are so hot is because there's community behind them. And there's a rally of people that come together, and it's easy for people to understand. So again, all the people that they haven't been here for years, they don't understand the tech, they don't understand, they're starting to flood into this stuff, and that's a risky game to play. All right, that's risky business right there by all these new investors coming in and getting into this stuff. So let's talk about what that looks like. But I think that these big tech narratives, real world assets, that's going to dominate this year, with BlackRock leading the way and these other institutions that are looking to tokenize on chain. AI is going to continue to have its moment because it's just going to continue to get better and better. DePIN has really emerged in the bear market. It hasn't seen a bull run yet. So I think that these narratives are the ones to watch for this year. I mean, of course, they are the top performing narratives of this year so far, but I want to explain to you why I think they're going to continue to do well. Like I said, I'm not telling you to go gamble your life savings on meme coins. I really hope that's not what you took from this, okay? I am telling you that there's a lot of opportunity here. You have to have a plan, though. You need to understand how this stuff works, all right? So I'm here to reduce your learning curve so that you don't have to learn the hard way. So let's talk about my plan. Let's talk about my losses. Let's talk about the way that I'm not going to do the things that I did do when I didn't have a plan. Here's a couple of examples from last cycle where I got shiny object syndrome. I was, into the emerging tech, and I didn't know what I was doing because I didn't understand. I half knew what I was doing. I knew the keystrokes, but I didn't understand the fundamentals of things. I didn't understand what are called tokenomics and what can lead to the demise of projects. And I was warned, but I was so sold and blinded by shiny object syndrome and emerging tech that I was like, no, this is going to change the world. This is the future of money. Like, everybody's going to be using Terra. They're going to tokenize all these different. I didn't know what I didn't know. Okay. Now I do. I learned a hard lesson from this. This is an example that, my team and my community, they love to endlessly pick on me for. I lost over $100,000 on my birthday 2 years ago. That was not very fun. And you can see this is the day that happened. And again, it's because I was blinded by my own ignorance. And it was one of those things you couldn't tell me otherwise. And both of these things collapsed. They were part of the same ecosystem. But this is something that you're going to run into in this space, is not knowing what to look out for. And so what did I learn from this? I learned tokenomics. I learned how to understand the economics of a crypto project and how something like this can happen. And guess what? I don't invest in stuff like this anymore. I learned my lesson. As far as bubbles go, I learned how to look out for things that are unsustainable. There was a game that we were all in. It's called Axie Infinity. And when I say we all, I mean quite literally most of the crypto market at the time. It's called Axie Infinity. And it had this crazy pump. And it was really a kicked off NFT gaming and blockchain gaming and cryptocurrency. But look what's happened. This is a major loss that I took in my portfolio. I bought all these stupid NFTs, and I had all this money invested in AXS, and there was something called SLP. It was another cryptocurrency. Hindsight's 2020. Looking back now, again, if I would have studied how the project actually worked, I would have, if knowing what I know now, I would have known that it was unsustainable. But I didn't know what to look out for then. And then there's a couple of examples of things that were too good to be true. These are other examples of things where I lost a lot of money in. One is called my liquidity partner. Sorry if this one is triggering to anybody that got into this one, because this one I know a lot of people lost a lot of money in. But my liquidity partner, I lost more Bitcoins than I would like to tell you. Plural, yes. Many of them, yes. I lost 10 ETH and far more Bitcoin than I'd like to admit publicly. This one over here is called Ohm. Another thing of me not understanding how tokenomics work. This project I got into, it was paying 30,000% per year. And then there were all these other subsequent projects that kind of modeled off of this one. All these DAOs launched, or decentralized autonomous organizations. They came out and they were all paying these exorbitant APRs. And I thought it was the coolest thing ever. I thought I was getting super rich. And then I realized I'm getting paid out in something that is so inflationary that I'm actually not making any money on 30,000% per year. So it was too good to be true, but at face value, it was killer, right? But now I know better and I've learned from these experiences. With this one, what I've learned is self-custody. I don't give my money to people anymore. I don't hand it over and expect a return from somebody anymore. I custody my own assets now. If it sounds too good to be true, it probably is. I've also learned additional layers in due diligence now from these losses and these experiences that I've shared. But it's not all bad. All right, I know I just painted a pretty sad picture over there, but I promise things are good. We've made a lot more than we've lost. Let's talk about my game plan. So now, from these losses and from these experiences, we've talked about narratives, we've talked about the growth in the market. I want to explain a simple strategy that I use that helps me mitigate my risk in this space. Because if any of that scared you, good. I hope so. I hope that you take some time to stop and think about what you're doing. My plan doesn't have to be your plan, okay? The purpose of this is I want you to think about buckets. And the strategy can be tailored depending on where you're at in your life, what your financial situation is. This is just how I like to play it, all right? So again, don't take this as you have to follow to the penny. I want you thinking in terms of buckets, in terms of risk mitigation. Personally, around 60% of my portfolio is allocated to blue chips. This is the big guys, Bitcoin, Ethereum, right? Those blue chips. 30% of my portfolio is allocated to growth. Those are the positions that I'm a little bit more speculative on, but they're more mid-cap, mid-market cap cryptos, like the real-world asset coins, the AI coins, those kind of things, where I'm going to experience, pretty high growth, but they don't carry the risk of, brand new emerging projects and things like that. With the last 10% of my portfolio, I'm gambling, okay? The reason for that is because we're in a space that there is asymmetric risk to reward. I like to take a little bit of asymmetric risk to reward from now and again. Yeah, I'll throw money on a couple of meme coins here and there. Yeah, I'll go bet on this brand spanking new AI project or invest in some pre-sale of some company that's a long shot. But I only do it with 10% or less of my portfolio because it's gambling, okay? By doing that, if those projects flop, my portfolio is not going to flop. So that's one of the biggest ways that people mess up in this space is they come in, they're throwing money at the wall and seeing what sticks, and they're losing it, and they're losing it, and they're losing it, and you're never getting ahead. It's because you don't have a strategy or a plan in place. And on the topic of throwing it at the wall and seeing what sticks, you've got to be around people that know what they're doing. You've got to be around the groups and the circles that understand this stuff. And I'm just going to go ahead and pat myself on the back. Last year, I was calling the AI coins to our students before they went parabolic. If you'd have invested in Fetch back then, it's up 920% right now. All right. That means your $100 is now $920. If you'd have invested in AGIX back then, it's up 723%. Even if you watched the recording 2 months late, you'd still be up massively now. All right. We cover airdrops. Airdrops is a really cool strategy that I like to teach where it's a way that you can earn cryptocurrency most of the times for free and for stuff that you were already doing. Now, if you want to get snazzy, you can actually go and participate in trying to qualify yourself for airdrops and you can get more free money. So our students have gotten thousands and thousands of dollars in free money from airdrops like Arbitrum and Pyth and Wormhole. Like if you see right here, so far this year I've claimed, this is just from a couple of weeks ago too, by the way. So far this year I've claimed almost $4,000 in airdrops. And I know people paying closer attention to Casey have made more. People are cashing in on this stuff, guys. You just have to know where to look for the information. There is endless information out there. You've got to know how to sift through it. Because like I said, that strategy of just throwing money at the wall and seeing what sticks doesn't work. So right now you've got a red carpet laid out for you to create generational wealth, but you need a plan and you need to surround yourself with the right people. Like I said, and it's not just me. Coach Igor, another one of our coaches at the ARC, he called Injective at $5.41 and now it's at $26. That's a 482% gain. The real kicker here, he talked about real world asset projects prior to BlackRock talking about real world asset projects this year and kicking off the whole hype. We saw on our trends report, real world assets are the biggest thing since sliced bread. Coach Igor talked about it on June 18th. This is a screenshot from the recording of his presentation on June 18th of last year. All these people just started talking about this stuff last month. So you've got to surround yourself with the people with the know-how and the wherewithal to identify these emerging narratives and filter out the bad ones, because not every emerging narrative is one that you want to be invested in. And look at our students making results. Here's a testimonial from a student, Tyler. But the kicker with the real world asset projects is all of the real world asset projects that all your favorite influencers are talking about today, Coach Igor presented on in June, like Rio. From his presentation to now, it's up 1,300%. Maker is up 403%, and Rio is up 1,134%. So, like I said, it's not just me. I surround myself with peers and with a community of people because collectively we are better than doing it on our own, and we all learn from each other. Like I said, my job here is to help you reduce the learning curve and avoid those costly mistakes that I've made and that Igor's made and that Gaven has made. We're just here to do that, but also to help you get ahead and identify those opportunities. In my opinion, the opportunity cost of not learning this technology is far too high now. I mean, you see the gains that you're missing out on. You see what's happening with BlackRock. You see what's happening with the government talking about this stuff. You see that everything is alluding that this is what is happening. I mean, shit, the stock market is trying to mimic crypto right now because they know that their time is up. Is the stock market time really up? No, but the proverbial time is up. You get it. And I gotta caution you, as if I haven't already, like I did, there's a lot of problems that you're gonna face if you try and take this thing on alone. You're gonna try and learn how to do it. You're gonna sift through hours and hours on YouTube, and you're gonna make a lot of mistakes. And I'm not just making that up. You saw the mistakes that I made because I didn't know what I didn't know. It's just, you have to go through trial and error. You have to, we call it, pay your tuition to the market if you're not surrounded by people that can help you avoid those things. You're not going to know the things that give you the safest and highest returns. You're not going to be able to identify and spot narratives. It will take you years to accumulate the knowledge that we've accumulated in the years that it took us to accumulate it. And like I said, you're going to spend dozens and dozens of hours searching through YouTube and Twitter and all of these different news sources trying to figure out, but everybody seems like they know what they're talking about. So how do you know what information is actually valid? And if you find something that's valid, how do you know what to do with it, or when to get in or when to get out, or how do you even know how to make the moves to take advantage of this stuff? Like, I just laid you out a strategy today, but if you don't know how to buy the cryptos or self-custody them, you can't take advantage of the strategy. All right. And what's a good idea today might not be a good idea a couple of months from now. So you have to know how to stay on top of the market too, and what indicators to look for. Without a community or coaching, you don't have any feedback loop. Now, if I'd have listened to my feedback loop, I could have avoided that big old costly mistake with the Terra Luna scenario that we had talked about earlier. But you need a feedback loop. You need people around you that will check you, and people that you can bounce ideas off of, hey, I found this thing and I think it's really great. Like, can you look it over and see if I missed something? Or, right, you need a collective of educated investors around you so that you're not missing out on things and so that you don't miss red flags either. So folks, there's two options. You can do it yourself, like I did, or you can follow a proven roadmap. If you're smart and you want to go with that option number 2, let's talk about how we can get you set up. All right. Here at the ARC, we have our Galaxy self-guided subscription. This gets you access to our self-guided course, which is a full e-learning course. This e-learning course, it has modules of text and videos and quizzes, and it's got It's a full e-learning course, okay? It helps you understand the basics of crypto and DeFi from the very beginning of what is crypto, what is DeFi, all the way through to becoming an educated DeFi investor and being able to participate in making money the way that the banks do and borrowing and lending like the banks do. And um, again, identifying trends and narratives. I've already told you all that. You get what we do here, right? It's pretty cool. But it also gives you access to the community, and there's a lot of live interaction that takes place. And arguably, the community is the most important thing that we have at the ARC, and anybody that you ask would tell you that. All right. The education is a byproduct. I mean, not really, but there's a saying that we'll say at the ARC that is, come for the gains, but stay for the revolution. And what happens is you come, you want to make a little bit of money, but you stay because you start to understand it and you start to be surrounded by people that think the same way as you and that want the same things, the freedoms in life that you want. And slowly, you are the 5 people you spend the most time around. You start to become it, and you start to embody it. And so we have classes that are not only on the crypto stuff, like Technical Tuesdays, where Coach Igor gets into technical analysis and market analysis. We've got Saturday schools where we bring you all of the top new emerging things in cryptocurrency. And like this past Saturday, I did a full portfolio walkthrough of my personal portfolio. We're fully transparent with our community too and everything that we're doing. And then we've got mindset classes, Ascension Club, Thrive Thursday. We're helping you level up, not just financially and in cryptocurrency, but mentally and spiritually as well. Like this community, again, it's a collective elevation, or it's a commonwealth as we call it, because we help you to reprogram your relationship with money, and we help each other to overcome maybe blocks that we have towards abundance or reaching our goals, or even analysis paralysis when there's just too much going on in the market. We help each other to take action and to stay consistent. We've got accountability. It's another big thing that you need in crypto. I should add that in there, is accountability. It's huge. But like I said, it gives you access. We've got a mobile app too that's cool. So it's an online platform. It's got a mobile app, and we have a community chat that everybody talks in, and all these live calls. So anyway, got a halving coupon, the halving. So we're going to go offer half off, and the price is $97 per month. It's originally $194 per month, but we thought it would be fun to, in honor of the halving, go half off, $97 a month. Exclusively on this webinar and the last webinar, the part 1. So excited to have you guys with us today, and want to offer you something special for you spending your time with us here. And again, appreciate you taking the initiative to learn this information. If you do want to get started, if it's something that you're interested in, go ahead and hit that link that that Ruben is dropping in the chat for everybody. And something I've got to tell you is that action takers are money makers. The people that got those gains that you saw on those screens, the people like me that went from 0 to where I'm at now, it only happened from taking action. It didn't come from thinking about taking action. It didn't come from getting more information. It didn't come from making a plan. It came from taking action. That action can be baby steps, but as we know, an object in motion stays in motion. Like when you're taking consistent action every day towards your goals, you're going to get there sooner rather than later. And I'll leave you with a thought. The time is going to pass either way, between where you're at now and the future and where you want to be. So why not put in a little bit each day? Because even if you get there slower than you had intended to, you're going to get there. But if you don't take any action, you're not going to get there at all. When that time passes and you arrive to whatever that time frame is, or you're going to be where you're at right now if you're not taking any action. So like I said, action takers are money makers. If you want to join the best community in cryptocurrency, again, with the education, the people, the mindset, come hang out with us. Hit that link in the chat that Ruben's dropping, and I would love to stay connected with you all as well. So you can follow us on YouTube here at this channel. If you're watching on YouTube, go ahead and hit that subscribe button. We are arc.revolution, and like I said, come for the gains, stay for the revolution. I've recently created a TikTok account where I've started to post videos about cryptocurrency to educate you there. My name on TikTok is Casey Talks Crypto. And if you want to connect on Instagram, see a little bit more that I'm a real person and the lifestyle side of things, my name is at Casey_Craig on Instagram. So would love to get connected with everybody. And once again, I genuinely appreciate your time spent with me today. And I hope that you learned something new, that you took away something valuable from this session. And I can't wait to see you in the next one. So I can go ahead and take a couple of questions and then we'll wrap it up. So thank you. Much appreciated. All right, let's go see. I see a couple of my students in here. Hello, hello. There's one of my students, Dennis. He says, if you want to go fast, go alone. If you want to go far, go with the community. And ARC is the key. I love that, Dennis. Let's see what questions everybody has. So grateful for you all. What was the death spiral? That's a great question. So what happened was, if you're not familiar with tokenomics, this might take a minute to explain. So I'll kind of give you the intro version, but bear with me. This is a complex concept, okay? So the Terra Luna ecosystem, it was there were two parts to it. Okay, there was Terra and or UST, and there was Luna. So UST was what's called a stable coin. Luna was a volatile cryptocurrency, just like any other cryptocurrency, right? So a stable coin is something that is designed to be, well, stable. It's pegged to the value of the dollar, the US dollar. And so a stable coin stays at $1 if you're familiar with USDC, USDT. Now, the difference between USDC or USDT and UST, I know, confusing, is that UST was what's called an algorithmic stablecoin. It didn't have a backing like USDC and USDT do. They're backed by dollars in a bank account, like hard US dollars back. $1 backs every single one USDC that's issued on the blockchain. All right, so if something ever happened, USDC depegged from the dollar, in crypto on chain, if it lost its price of $1, you could still go redeem your one USDC for $1 US. Okay, so that's like a hard backing. That is a fully collateralized stablecoin. UST was an algorithmic stablecoin, so it wasn't backed hard. It wasn't backed by hard dollars like USDC, and so Luna had what's called an elastic supply, where it was, it had a mint and burn mechanism with it, where you could always redeem one UST for $1 worth of Luna, and conversely, you could always redeem $1 worth of Luna for one UST. And so that mint and burn mechanism, and minting and burning means more being printed and some being removed from circulation. That's what kept that price in check. All right. So what happened is there were a couple of massive sell-offs, and there's a lot of speculation around this, that they were big whales in crypto that were trying to make this happen. There were massive sell-offs that caused UST to depeg, and then basically what happened, people started exploiting that mint and burn mechanism, where they started redeeming faster than the price could get propped back up. And so the supply of Luna inflated so high that any money flooding into it couldn't prop the price back up. I mean, it was just getting inflated down to nothing. So that's what that death spiral was the supplies just went insane. There was no amount of money that could come into the space that could have been able to prop it back up. So that's what the death spiral is. I hope that helped to clear it up a bit. How many classes do we get per month with Galaxy and Apex package? Hey, Jay Nelson, great question. So with Galaxy, so Galaxy's our self-guided subscription. You get access to Technical Tuesdays on Tuesdays. You get access to Ascension Club on Mondays. You get Thrive Thursdays on Thursdays. You get Saturday schools on Saturdays. With Apex, the live class option, you also get access to what's called Gaven's Day, which is our founder Gaven, his exclusive class on Wednesdays. And you get access to the live Apex classes with me on Tuesdays and Thursdays, where the material is taught in a live bootcamp style format. And you can interact with me. It's an interactive class. I have you share your screen. We walk through things together, and that's it's a 5-week-long course. So how many per month? Well, you have all of those classes that I just mentioned every single week. So a lot, to answer your question, Jane Nelson. I don't have a number for you. All right, let's get one or two more, and then I've had you on here for over an hour now, so we'll get going here. But let's see what else is going on. Yeah, hyperinflation is simply put. You're right. What do I think about VR and crypto? I think we're not quite there yet. You know, I think like the whole metaverse VR thing, it was a part of the big bubble that happened in 2021. I think we're not quite there yet. I mean, as far as the tech goes, yes, we're quite close, and actually, it's really starting to be there. But as far as actual adoption goes, and guys, adoption matters. Like, I don't care how good the tech is, adoption matters of this stuff. Like, you could have the greatest project in the world, you could have the coolest technology in the world, but if nobody's using it, it doesn't matter. So, to answer your question, it's not there yet. But it's starting to. I mean, there's a project called Victoria VR that, and this is not telling you to go invest in Victoria VR, so don't take it as that. But there's a project called Victoria VR that issued the first. They created the first metaverse for the new Apple Vision Pro VR goggles. So, like, yes, that's all in the pipeline. It's just, is there anything meaningful to speak of right this minute? No. Let's see. I'll scroll back further. Trying to pick one more. I don't see questions. I see a lot of comments. I'm not seeing questions. Everybody's asking me what to invest in, and I'm not going to give you like a definitive answer because, first of all, two parts. It depends on what your portfolio currently looks like. If you hold zero cryptos, the answer is probably different than if you have a whole well-established portfolio. And first of all, I'm not going to tell you what to invest in anyway because I'm not a financial advisor, but I will tell you what I'm investing in. And second, that alpha is reserved exclusively for my community. I just gave them a whole portfolio breakthrough. I can't give that out for free. That alpha is for the community. I got to give love to my people. So, yeah. All right. Well, I'll go down to the bottom one more time, see if there's any new questions. With Apex, is that a one-time fee or lifetime access? So, great question. Apex Live is a one-time fee. You can pay to just go through Apex once, or we have what's called Infinity, where you get Apex for life. And we actually, to make it a little less confusing, I believe we're going to change the name to Apex for Life or Apex Life or something like that. But so if you see Apex versus Infinity or Apex versus Apex for Life, that's the difference, is that Apex is a one-time fee. It gets you that 5 weeks of courses, plus the recordings that you can always go back and reference of your 5-week cycle. And then Infinity gets you lifetime access to everything. You have all the classes, all the recordings of everything forever. So that's the difference. So anyway, thank you everybody so much for being here. Like I said, you're all so much appreciated. I hope you learned something new, and let's get connected. You know, hit me up on Instagram, TikTok, follow us on YouTube, subscribe to our channel, and I'll see you around here next time. Thank you.